going on, guys? Today we're here at our first listing. This is located in Foster City, California, a suburb of San Francisco. I'm here with my friend Mike. His team are selling this property and it's actually not even on the market yet. Mike, can you tell us a little bit about this house and what's the price point?
Yeah, hey guys, so we're here at 1069 Pensacola. This is a single family home here in Foster City. Foster City is conveniently located in the middle of the Bay Area, conveniently 35 minutes away from San Francisco and 35 minutes away from Silicon Valley. This is a 3-bedroom, 2-bath, a little over 1,600 square foot home with a beautiful swimming pool and nice yard. Let's go check it out.
What's going on, guys? So today we're in this listing that's going on the market in the next 2 days. I'm here with my friend Mike. He's part of Rice Homes. He's going to talk a little bit about himself and his team. It's one of the best top producing teams in the Bay Area. And today we're in their listing that's priced in the $2 million range. And yeah, tell us a little bit about.
Yeah. So hey guys, my name is Mike Sinitsky. I'm with Rise Homes. I'm a San Francisco Bay Area native, born and raised. My team and I, we specialize in the San Francisco Bay Area. Today we're here at one of our listings in Foster City, which is in the Mid-Peninsula, about 35 minutes away from Silicon Valley and 35 minutes away from San Francisco. It's a very residential family neighborhood and very popular amongst younger families trying to have a nice, safe place to live, raise their children. We have top-rated schools in this neighborhood, very close proximity to Oracle in Redwood City, Redwood Shores area. And then you have San Francisco, about 40-minute drive. So it's a very convenient location, beautiful home. So yeah.
And you guys are located, right? Like your
actually we have 2 offices. We have one located in San Mateo. That's our central office, which is right next to Foster City. It's a neighboring city. And then we also have another office in San Francisco as well. But most of the time we're on the road meeting our clients and,
for sure.
Out in the field.
For sure. So I wanted to kind of touch, I know you and I have been working together for a couple of years, a lot of like successful deals, some really tough deals where we had to like beat out like competition and get some seller concessions. We'll go into the details, but let's touch on a topic that I think this year has been challenging for myself as a lender and obviously for you guys as real estate agents as well, is home insurance. And as particularly in San Mateo County, because we have some cities in the woods, in the redwoods, a little bit more fire zone. Has it been a real challenge, and how are you kind of solving this? Or
so let's kind of talk about the general problem. So there's 2 problems that we're facing. One of them is nature and geographical, just location. As everyone famously knows, California's had a lot of wildfires lately, and so there's been insurance companies that have left the state of California because of that, and insurance options have become limited and insurance costs have increased, and that could have just to briefly segue, that could have some serious impacts for people's monthly budget, right? If they're budgeting a certain number with you, but then the insurance cost is higher than what they were anticipating or estimating with you, that might knock them out of the price point that they're looking at, or might even pose challenges for them getting the loan. So just taking it back for a moment, we have the high brush areas is what the insurance companies are calling them. And basically the insurance carriers aren't giving fire coverage. And as you know, to get a loan, you need it. Yeah, you need an insurance policy. Without an insurance policy, that loan won't go through. Yeah, exactly.
Well, unless you buy for cash, of course. But
but then they're not using you, right? In that case, so there's that, and then there's a separate problem, which is just the Bay Area's aging infrastructure and the Bay Area's homes that a lot of them were built when you get out into the peninsula, San Mateo County, where we're located today. A lot of San Mateo County was built out in the 50s. And 60s, and although maybe the homes were built out of great materials, there are certain things in these homes like Federal Pacific panels or Zinsco panels or knob and tube wiring in even older homes, fuse panels in homes that are older than the 50s, and the insurance companies don't like seeing that either. And then you also have homes that have really old roofs, and the insurance companies won't insure the homes with
Insured,
the
yeah.
old roofs. So there's a lot of nuances with insurance, and I think it's important to work with an experienced lender like yourself that's familiar with the San Francisco Bay Area and the nuances, and a realtor, a real estate agent like myself,
Hmm.
who has experience doing transactions in this area, because I will warn my clients about these
And you probably have a good amount of
challenges.
contacts that might be able to give
Exactly,
insurance for a
exactly,
challenging
exactly. You know,
area.
with the turbulence we've been having with that lately, like I've developed the contacts that know how to navigate it, and
Hmm.
ultimately, I don't want to draw the picture that you can't get an insurance policy on a home here,
Yeah.
but it has become a little bit more challenging, and it's a solvable issue. But it's very important that the people that you're working with, the lender that you're working with, the agent that you're working with understands this and knows how
Hmm.
to navigate this, and walk you through that process so that you have a successful escrow, and the purchase isn't stressful. So that's kind of the general idea. A couple of recommendations I would love to make to viewers is, if you're buying a home, definitely reach out to some agents if you have the time, insurance agents, and kick them the address and say, hey, I'm thinking about buying this
Hmm.
home. Do you foresee any issues? Can you check your system and see if there's any issues getting insurance? And I think that will, at the end of the day, make your
Hmm.
job a lot easier.
Yeah, I don't know.
And
I'm definitely pivoted as well. I
yeah,
remember times where we would estimate even on a $500,000 or $1.5 million house,
yeah,
we would estimate that the policy would be like $100 a month,
yeah,
and it would be like dead on all the time, plus
yep,
minus five, $10.
yep,
But now it's like you almost have to estimate it's going to be $200 a month, maybe
yeah,
even 250.
yeah.
Um,
Well,
s-
I'd say it's right now. We're this is October 2024, and right now the average, is probably around 3,000 mark in the San Francisco Bay Area, for the year. $3,000 a
mhm.
year. I'd say that's average, and
Yeah,
that's just because of the age of the homes, and the location of the homes. So just something to be mindful of.
yeah, yeah. Although I've never had a case where a property couldn't get insurance.
Yeah.
It just sometimes becomes an issue where it becomes a little bit more expensive than people expect.
Exactly, and that gets into the underwriting process, right? And again, it could create a challenge for your borrowers, right?
Hmm.
If all of a sudden they were planning on X, and then their monthly payment is now Y, their debt to income ratio gets thrown off, and it just
And
throws a
also just
wrench.
like not a good feeling. I remember
Yeah,
I had a deal couple like a year ago in Belmont, and it
yeah,
was like right before or right after COVID,
hmm,
when kind of like the insurance companies started
yeah,
increasing the prices and everything, and they're just like assessing California as more risk.
yeah,
And this guy anticipated that his insurance was going to be like 1,800,
yeah,
and then he started getting quotes for 5,000. He freaked out. He was going to like back out of the deal,
yeah.
like got super pissed, like yelling at the agents, like yelling at. For sure, for
Understandably,
sure.
it's something that comes out of left field, and throws people's budgets
But
off.
luckily, we kind of like through context found the agent that was able to do it for 2,800
Yeah,
versus 1,800 that he thought. But still, it's like a lot better than five. So at the end of the day, he was okay with it.
yep, yep,
There's definitely solutions. Okay, cool. So insurance definitely, but obviously working with the right team and kind of like as a buyer, like Mike and his team, and particularly Mike, like he goes super like detailed and beyond like with the buyers. Sometimes I'm like super impressed because like his buyers like even know monthly payments before I even send it to them. So it's kind of cool that he gets like a full service to them. So we just talked about insurance. I know
yeah,
it's a challenge, but it's good to know that like we're able to solve it. It's a little bit more expensive, but listen, like everything's going up, just like
yeah,
home values
yeah.
and price of gas,
And it's
everything's going
probably
up.
temporary. Eventually, things will sort themselves out, and improve. Yeah.
Yeah, yeah, I think so too. But let's touch up on another thing. I mean, you've been in real estate for like, many years now. I've been in lending for many years. And the interest rate hike that we've seen in the last couple of years is probably one of the bigger ones ever. And I
Yeah.
know we've done deals where the rates were in the sevens.
Yeah.
So what kind of feedback and what kind of like I don't know, how are you able to solve this thing with like some of your buyers?
Yeah. Well, to start, it was definitely a runaway problem, right? For the last, I'd say, about 2 years, we've been seeing an increase in rates. And as you mentioned, we peaked at above 7%, which was a
Crazy.
lot. Yeah, it was
Yeah.
a lot. And it had profound impacts on people's monthly payments. Um, and quite frankly, a lot of people decided to pause. They decided to put off the home buying process. But um, what I like about working with someone like yourself, a broker that is flexible, that could think outside of the box and really present some sort of options to my clients, my buyers, or even to my sellers when we're having a
Mm.
tough time selling a home. Working with you on some sort of creative lending option is always great. But we did a lot of temporary buy downs in the last 2 years, which gave buyers temporary relief for a short period of time to weather the storm of these higher rates,
Mm-hmm.
in anticipation that eventually the rates would start coming down, which we're starting to see a little bit. It's October
Mm.
2024 today, and we're starting to see the rates come down, and maybe people are starting to refinance. But yeah, I mean, maybe we could talk about the temporary buy downs and how those work.
I think it's a good idea. I just had a conversation with the client that we closed in Pleasant Hill.
Yeah,
I think it was like 2 years ago,
yeah,
and at that time it was like a steal. Like he's like ecstatic. I'm on the phone. He's like, wow, like home values like went up so much in the last couple of years. And at that time the rate was also 7%. I think
yeah.
it was like 6.99 at that time for a 30-year
I know
fix.
exactly who you're
And
talking about.
we
Yep.
ended up doing a 3-year buy down. So
Yep.
for the first year of his mortgage, he ended up paying 349. Then the second year he ended up paying 399. Then 499. Then 599. So right now he's approaching the end, and I just talked to him recently, and then the interest rate pretty much came down to
Yeah.
pretty much the last year that he has on the buy down, which is cool because the idea of this program is to like, okay, if the market rate is 7.5, the first year you're gonna get -3, second year -2, and then third year -1.
Yeah.
And the idea is that you never even get to year 4 when the rate goes to the normal. And here's like a case by case example with our client. It's been 2.5 years, and now he's ready to refinance
Yep.
before that temporary cycle even expired, which
Yeah.
is like kind of what we explained. And then kind of obviously we cannot guarantee it, but it's
Yeah.
kind of cool to see how it works out that way.
Yeah. Well, it goes to show that when the interest rates were higher, market might have slowed down throughout the Bay
Mm.
Area and various parts. It created opportunities for buyers to come in and negotiate, which you don't really have a lot of in the San Francisco Bay Area. Famously, we're
Mm-hmm.
known for non-contingent offers. All the inspections, everything's done up front, whereas
Mm.
in most other markets, everything is done after an offer is accepted. And here you have a lot of non-contingent, multiple offer, competitive situations. But then we had these pockets in the fourth quarter of the
Mm.
year, and where we were able to leverage these temporary rate buy downs, which weren't as impactful on the seller's bottom line, right? The seller would still net more money, but they would give a little bit to get the deal across the finish line, sell the
Yeah.
home. And so we capitalize on those opportunities for our buyers. And like you mentioned, now the rates are coming down, the market's kind of
Mm-hmm.
picking back up, and the home
It's harder
prices,
to do it.
well, it's definitely harder to do it. But we just had one last week that we
Yeah,
did
we
something
did. Yeah,
similar.
that was
Yeah,
cool. It's end of the year. It's your
yeah,
magic time.
it's the fourth quarter. It tends to be a little bit more buyer friendly, and so yeah, it's just a great opportunity. Here's what I like to tell my buyers is that you can always refinance the home
Mm-hmm.
for a lower rate. My parents own their home. They just recently sold it for over 20 years, and they refinanced it 5 times over that
Mm-hmm.
period of time. So you can always refinance. You can get a lower rate. There's all these different products out there, but you can't buy the home for less. And
Yeah.
historically, we know that home prices keep going up and up and up and
Mm-hmm.
up. There's dips here and there, but if you look at it on a 5, 10 year scale, right, it's always upward trend. So leveraging these little moments in time as a buyer to leverage a temporary rate buy down, where we get a seller concession, maybe get the house for a little bit less, you know, always ends up a positive outcome for our
Mm.
buyers later down the road. The houses end up being a higher value. They can refinance, and there's a famous saying: "Marry the house, date the rate,"
Yeah.
which means you're buying the house. You bought it for X, and you can't rebuy it in the future for a lower price, but you can always refinance for a lower rate.
I freaking love this program. It's kind of tough where like you can't always use it because it does require seller contribution. I've probably done maybe like 10 or 12 of them, and probably with you and your team, maybe almost half of them. So
Yeah.
you guys know how to push them through and get them accepted. But in short, like I still have conversation with my buyers. I'm like, guys, If the payment is sensitive for you or it's a little bit too high, but you can qualify, let's try to find a house, or maybe like actively look, but maybe not make offers, but keep an eye on the market, because you might find a house that you like, but for some reason, whatever reason could be, maybe the Federal Reserve came out and made some commentary and the rate spiked that particular week. But that obviously has effect on buyers. So if a house is on the market and it's like 30, 35 days, psychologically, that seller, they're going to be in a position where they're going to be stressing. They're going to be thinking like, oh man, like, what should I do? Should I do a price reduction? But you as a buyer that wants to use these creative programs, that wants to get your closing costs covered, that wants to use these 3% buy downs, which is crazy aggressive. Like in the Bay Area, we could do that. They're going to change the loan limits soon. You could do that for a property that's 1.3 with only 10% down payment. Like we'll get into that a little bit later. But as a buyer, if you find a property like this that's been kind of stagnant on the market, and you go to that seller before they do a price reduction and say, you know, Mr. Seller, I'm okay with the price. I see that you're having some trouble selling it. I'll give you that price, but how about you give me back $40,000, $60,000? I've had a deal with their team where we got a credit for $60,000 in order to do a 3-year buy down. So it's possible, but you have to kind of like anticipate it, and don't be afraid to ask.
So you got to identify the property.
Exactly. Yeah. You do have to have some luck here, but like if you go to that seller before they're ready to do it,
it's a strategy play. It's, again, you look at the average days on market in a certain area, and you see that this home, let's say like the average in most Bay Area cities, closer to San Francisco, is about 2 weeks. 2.5 weeks is the average days on market today. So if you see a home that's been on the market more than average, that's your opportunity to go in and try to negotiate something like this.
Yeah. All right, Mike. So I do have a question, because you guys are very active in this area. You sell a lot of homes. You help buyers look at homes in this area.
Yeah.
So we're in a house that's in the $2 million price range.
Right.
Can you give us a little bit of idea why homes in this area are so expensive?
Yeah, I mean, obviously they're well laid out. This one here is actually a rancher. It's a single-story home, so you can get old in it. You could have kids, not worry about stairs, but it's really boils down to the neighborhood, and again, the convenience of the commute, the safety, the proximity to shopping.
Got to be good schools too, right?
Great schools, exactly. So, for all those reasons, you're seeing a lot of competition in an area like this, and your average price point around for a house this size is roughly around $2 million. Again, depends on the condition, but yeah, that's pretty much it.
Wow, and you get a pool.
Yeah, you absolutely get a pool. This one has a nice pool.
I was actually surprised to see a pool in like the Bay Area, especially like close to San Francisco. I know in the suburbs, a lot of
people think of San Francisco, think about Carl the Fog, and that it's always foggy.
And no one has AC.
Yeah, but when you get out to this side of the Bay Area, when you're about 35 minutes out, once you push past San Bruno, that's kind of the fog line. You don't really get foggy weather out here. It tends to be 70s, 80s most of the year, about half of the year, if not more. So it's a very moderate climate, very Mediterranean. You don't always have to run the AC even.
82 degrees right now in the Bay Area. This is, it feels nice. My videographer, he flew out from San Diego. And when I told him a couple of days ago, I'm like, dude, it's going to be really nice weather. It's going to be like 79, 80 degrees. He laughed, because obviously for them, it's like not very hot. But here it's like, it's an amazing day.
Yeah. But yeah, it's just a great place to live. Very, very safe, and great schools, and convenient for people to commute to work.
Cool. All right, my man. Thanks for showing it to us.
Thanks. Appreciate it.